We're going to talk about China tech because it's been a pretty bruising year for the tech sector in China, for the tech companies. Regulatory pressure has continued, particularly on gaming, but in particular, COVID zero policy over in China, which has really hurt the economy, has weighed on areas like consumer spending and advertising, and that's hit companies like Alibaba and Tencent. So investors are wondering what happens next year, what are the expectations? Well, analysts are expecting some sort of recovery in terms of growth for some of these companies, which this year reported their slowest growth on record, but they are cautious. It won't be a V-shaped recovery, and that recovery is predicated really on three things. Firstly, how China exits this zero COVID approach. And certainly we've seen so far, it's a messy business. It's not very smooth. And that's really a concern going forward. Can China get this under control and reinvigorate the economy, which will ultimately help a lot of these tech companies over there? Secondly, regulatory calmness. We know over 2020 and 2021, there's been intense regulation on the Chinese tech sector, and that's really hurt the growth of a lot of these companies. But analysts are expecting a little bit more of a predictable environment when it comes to regulation. They feel that there won't be any of these huge policy pushes that we've seen over the last 2 years, and that should help. And thirdly, adapting business models. It's going to be predicated on how a lot of these companies like Tencent, Alibaba, Baidu adapt their business models. We've already seen them exit some of these non-core businesses, these more unprofitable businesses, trimming some of the fat as well. They've done a rounds of layoffs as well this year as well. And clearly there's been a lot of focus from management through earnings calls this year on new areas of growth. For example, with Alibaba, cloud computing, with Tencent, cloud computing, fintech, and also its international gaming business as well. So really any kind of recovery is going to be predicated on that. And just in terms of outlook on stocks, these have been absolutely battered this year and, as well. Now, a lot of analysts feel these are very cheap stocks comparative to global tech companies. Analysts at Jefferies say that Chinese tech companies are trading at about a 14 times 2023 PE versus 22 times for their global peers. And that could mean they make attractive investments if this recovery does take hold, guys.